Market Analysis channel. Today, I will be doing a recap on my trade recently so you can follow how I trade and have idea on how you can trade my analysis. Let me get into this trade right away. When you look at the chart, I have a pattern which form on Rune USDT and it's heading towards its previous high, which I was expecting a breakout from that point. Why the price was going, when you look at the chart, I want it to still form a little bit handle prior to breaking out, which will make the trade a successful one. And as the price progress, it rise in between and it drops drastically. From there, when you look at it, it approached the 50-day moving average, but it couldn't get through it, and then it head up towards the previous peak. As it is heading towards the previous peak, I initiated a buy order few points above the previous peak. This peak which I put this crosshair button, that was when I put my pending order. And this particular bar opened the trade right away. I'll have to draw a blue line in there so you can see my entry point. Let me put in a blue line. The trade was executed above this level, few pips above the level. Okay, I'm putting in a blue line. And immediately I enter such trade, I set my stop loss at just few points below the breakout bar. The stop loss, I'll use a red line for proper identification. So my stop loss was put in between this particular bar and it is in color red. Let me put that in red so there won't be a confusion. Then I keep watching the trade gradually. As the trade continue, the first red bar that came down, it couldn't hit the stop loss, and we have this explosive blue bar with an explosive volume at the bottom which break up heavily. And as this occur, I have to manage my risk. I have to move my stop loss from the red bar. I have to move it few points above the blue bar. That was exactly what I do on this trade. I move my stop loss. Let me try to move the stop loss now. I move the stop loss just few pips, few points above the breakout bar. And I'll keep watching the trade to see how it progresses. When you place your trade like this, you've put in your stop loss, you've raised it above the entry price, then you have a free trade. This is a free rolling. There is no risk on this trade any longer. The worst thing that could happen is for you to get a few profit from your entry point to the stop loss point. And when you look at the trade as it continues to progress, the next day the bar hits the stop loss and I was out of this trade with a very little profit. But I haven't done with this trade yet. I was watching closely and the price trade toward the support point, which is the 50-day moving average. At that particular area, I was expecting the institution to come in and push the price upward, because when price trade towards 50-day moving average, that's a level where institutions add to their position if the trend is likely going to continue. And I keep watching the trade on and on. It breaks below the 50-day moving average a little bit, then I was expecting it to come towards the 200-day moving average. Remember, the 200-day moving average is the floor for uptrend. So whenever a price trade towards the 200-day moving average, we expect the price to bounce up from that particular zone, because that is the floor of an uptrend if the price will continue its rally. Then the bar keep fluctuating around the 50-day and the 200-day moving average. It has this a reversal bar. This type of bar always mark the bottom or top of a rally or of an upward swing or a downward swing. So while seeing this, it caught my attention that hopefully the institution are pushing the price upward, they are bidding, and then I start watching closely if there could be another swing point that will give me an entry into this asset. As I was watching, it also formed another reversal bar. I thought it's going to come down to the 50-day moving, the 200-day moving average, which is our red line. But at its formed this bar, when I about one, two, three, four additional four bar will call, that bar mark another swing point. While looking at it, and the price couldn't come down to the 200-day moving average. Look at this low of this bar, this new downward price couldn't touch it, and it reversed from here upward. While it does that, it signaled to me that there is possibly a reversal, and I also set another buy order, which is a pending order above this particular point. I set my price, that's the entry price, and I also set a stop loss price too. No, I haven't set the stop loss price. I'm waiting for it to break out. If it break out, then I set my stop loss price. As the trade continue to progress, it breaks out on the next bar. Then I put in my stop loss. My stop loss, which happens to be a red line, it was placed underneath the breakout bar, and that is in color red. So while things continue to progress, I keep watching the trade. Then we have this explosive bar once again. When there is a breakout from a previous swing point, and there is this type of explosive bar that confirms that institution really pushing the price upward, that's an opportunity for you to move your stop loss from its current point above your entry point a little bit. And that's exactly what I do in this position. So I've now de-risked this trade. The worst thing that could happen is for the price to come back down, hit the stop loss, and I'll have a few profits. So I keep watching. With this, I know there is no risk on this trade. But as the price it continue heading up higher and higher. When the price continue to head up higher and higher, I know the trade has been a successful one. I have to sit back and relax, and the next thing for me to do is to keep watching for reversal bar, which will tell me when to take in my profit. When you continue to look at this price, there hasn't been any reversal bar, which is a very good indication that the trade is still continuing its upward rally. But towards the end of the run, we have this explosive bar as well. When you see explosive bar, it's telling us that a lot of orders are coming in. And what really happened? The institutions are selling while the amateur traders are buying. And you know, the amateur traders orders can push the price upward. Then we have this reversal bar on huge volume. The volume is as huge as the prior bar, but the price come downward. And when you see this, it's telling us that despite the huge volume, the price could not progress. That's what we call distribution. Institutions are distributing their assets. What they've bought from this particular area, which is around 1.9, they are now selling it at around 5.880. Then I have to do what? I have to initiate a sell order. I move my stop loss below the low of this bar. Hopefully, the next day the price might still continue upward. And that's exactly what happened. When the price continue upward, I move my stop loss a little bit to the low of the new bar. But the third bar hit the stop loss, and I was stopped out of this trade. When I was stopped out of this trade, I keep watching the position, and there hasn't been any move from then onward. My total profit on this trade was from this particular point, which I initiated the order, and it continue onward and onward to the low of this red bar, which I made over 200% on this single asset alone. This is how you manage your position when you are trading, and this is how you can continue trading the trend for you to benefit the full move on your cryptocurrency asset. Guys, if this analysis really be of help to you, subscribe to the channel for more updates and analysis. And if you really want to get serious about your trading, you can send in your message. I'll be giving you live analysis, my entry, my stop loss as it's happening real time in the market. Thanks for watching. We'll see you back in the next analysis. Bye.